Hello, everybody. Hello, 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 hello. How you guys doing? Sorry, my nose is bugging me. Well, I'm glad I kind of figured this one out at the very least. Um, I discovered some things. I did my study and I did a little bit of homework last night to really gauge what the heck is going on. It's currently 9. We are nowhere near we are near market open. We got like 28 minutes ish. Okay. We were in a downtrend. We got messed up right here. We entered here thinking price would continue based on a fair value gap that did not occur. Like we messed up big. Um, but not too big. Not too big at all. Let's go ahead and check news today. Let's see if things have changed. Yeah, red folder is practically the same. If it was good, if it was greater than forecast, it'd be good for currency. The exact same, literally. Uh, This one's the same thing. Greater than forecast, good for currency. The forecast was greater than the previous, so we might see it actually go up. There's potential for it to. Not necessarily high impact news, but at the same time, enough to really change direction in market. Um, what exactly are these red lines? What exactly is this pink zone? What exactly is all of these? All of these? Well, I did my homework last night and I decided to actually hit the chart and see if I could get it pinpointed and you guys ever wake up and feel your airways opening and then from there it's like make your nose itch and then you gotta sneeze. And when you sneeze it kinda makes it worse. Kinda what just happened. I felt it like opening up across this and across that just a little and it just and there goes my nose. Uh Back to what I was saying though. I highlighted points of control per auction market theory. And it's exactly uh, in the consolidation pattern where things create a new high and a new low, right? That you get points of control and it's directly at the center of it all. And it represents where price was balanced per auction market theory's rule set, I guess. And this pink thing right here is a range uh, between the high and the low made outside of the imbalance because it fell into a range, a previous point of control, which I discovered to be roughly right here, and accepted this range. It proceeded to consolidate, which meant balance. Price found a fair value and proceeded to consolidate. Everyone agreed that this was correct. Well, now that we've fast forwarded to high this morning, now we've got a little bit of a change. And we have waited long enough since yesterday to really see price consolidate enough and then break out of said range. Now we're looking for really one thing. Either it accepts the breakout and continues higher, or this is a false breakout, in which case we'll be seeing price come back down. It won't accept the imbalance. And I'm going to go ahead and go out on a limb here. It'll be entirely based on the opening of the market of New York session. That's going to change the general direction of where this is. If I had to guess, that's what I'm thinking. Let's go ahead and mark highs and lows real quick. We have the low here on Asian session. Boom. I'm not entirely going to use auction market theory for this. I just wanted to do this right here to really gauge what I think market was going to do And end result, I was kind of right. Kinda. Okay. Just a little bit. Let's go 30-minute. Yeah. We don't have a high on Asian session that we could really take a look at. This is the low just outside of session, down, up, right there. And this is the high outside of session. That's not. Ooh, hello. Relative equal highs right there. You see it? Look at that. And it also could be targeting that high too. That's right at the point of control I labeled out for this right here. So we could see a fake out, a fake breakout, false breakout right here occurring. Prices had enough time to move up within this range of this point of control, and it's right now reacting kind of strongly to it. Kinda. We'll see exactly what's happening. For the most part, we were in a downtrend. We consolidated for a little bit. We broke structure, came back down, retested this. We found ourselves our breaker block. From our breaker block, based on this break of structure, we have a continuation higher. We're in an uptrend on the 30-minute. We're in an uptrend on the hour. Break of structure, come back down, retest, breaker block, move higher, fair value gap. 4 hour. 4 hour, we broke structure here. Not necessarily speaking that we're in an uptrend, but I mean, that's kind of what that states on TJR's strategy that I'm using. We had points of control throughout this, different highs and lows made throughout imbalances. And from here, we have our break of structure. We also made points of control throughout this to really target where price might want to hit later on. I'm going to go ahead and cue this PC up real quick to really put those rules in front of me to really gauge what's going on. The whole point behind me using auction market theory was to put a logical explanation to the charts while at the same time making sure that I'm not deviating too far away from TGR strategy to the point where I'm completely doing something new, right? Instead, what I'm doing is coupling the two together in such a way TGR is my entrance method and auction market theory is my exit method. So I don't have to worry about missing out on potential profits. I can just go ahead and leave the market in the event something's not going my way. And I know that we've reached a point of control, a range, where market has not only accepted into, but could potentially reverse out of. This will prevent me from losing any real profits and protect me from that potential reversal to the upside. The problem I had last night, or yesterday morning, I should say, was when we took a trade here, it was based on the confluences TJR had, but I did not wait to enter mid-session. I waited just long enough for price to make more of an imbalance to help continue that trend, when in actuality that was the wrong move. I should have waited after market open to really gauge what price wanted to do based on the manipulation of that key level. So that way the best trade would have been to really take a trade like roughly in here and then back up. Ultimately, the trade idea was correct. We just didn't realize the point of control that price wanted to come up to, this right here, created relative equal highs. It wanted to take care of that, so it swept past those, hit another high, and proceeded to go lower. This was not our final take profit, but it was a take profit nonetheless. And it did hit that ultimately. So that's the thing. Um, Ever since we hit that, though, we've pretty much tapered off, had a bell curve occur, consolidated. Sorry, we consolidated roughly to the edge of the top, waited, broke above, so price rejected the balance, proceeded to come back in, broke past it big time. Now we're looking for acceptance. It looks like what's happened is we've come up within this range. We didn't hit necessarily the point of control, but we did hit the range and it has since rejected it. Let me cue this up. My nose is toast now. Sorry about that. There we go. All right. So it wasn't within range. I went out of. So I'm thinking what'll happen is rule number 3, where once price accepts outside the balance range, it's likely to come back. It's likely to become imbalanced and seek new value, often the point of control of older balance areas. So here's point of control. It's accepted, I think. Outside the balance, so it's become imbalanced, which makes sense. It's likely to become imbalanced, seek new value. So we've broke structure. It could potentially continue lower. But what I also think is going to happen because of the way the chart's lined up, it's got it set up like, let's go ahead and just draw this. Oops. This. So I need you out of my way so I can see this, please. Okay. So this thing has it set up to where it looks something like this right here. It comes we have this point of balance here, right? And price has come all the way down through to this, has come back up, and it's seeking new uh areas of value, fair value areas, right? This is in a downtrend though. What I'm thinking is going to happen is something like this right here, because we're in an uptrend right now. So we have point of control, similar situation, right? Except we have an uptrend occurring. So we have price essentially consolidating, breaking out of this range here. And then from this, we also have price coming back down. And what I'm thinking is going to happen is something similar to this, where it comes back down within this range. And then from there, it finds new points of control or ranges to test that fair value. From that, we have our trend seeking from imbalance, from this consolidation of this point of control, new fair value areas. That's probably the best I have ever drawn on this software, not gonna lie. Can you tell Scriblio has got me trained a little bit better than before? Just a little. I'm glad that actually worked out the way it did. I didn't think I'd explain that too well. If time and volume build at the edge of a balance, price is likely to push through. And that's essentially what we're seeing here. Price has pushed through and has accepted that push through. It's pushed through twice now. So, acceptance. What is acceptance of imbalance. Achieve new fair value or value area. Market is in a constant cycle of balance and imbalance with a trend is underway. Imbalance. The market is aggressively searching for a new price level where buyers and sellers can agree. The auction is complete once the market finds this new level of value and price action begins to spend a significant amount of time consolidating in a new range. This is an old range where price pretty much sought out, consolidated at the edge of one, and then proceeded to break out of. So the downtrend, the auction that is this set of imbalances, is over based on this consolidation because it's found this point of control and this range to consolidate within and agree upon. Now, the trend has shifted where, based on this consolidation, we have a breakout of this range on the high side. Buyers are in control. Because buyers are in control, we now know that price is going to be moving a little bit higher. We don't know how much higher, we just know a little bit. The question is, will price continue to seek out old points of control, old fair values, or will it proceed to seek new fair values? Based on what I'm looking for Rule 5, if time and volume build at the edge of a balance, price is likely to push through. Cool. Once it's pushed through, it's now considered imbalance. Imbalances seek out areas of previous balance to consolidate within, so that way, because events happen to allow price to move higher. Now we've got to agree on two things because we agree right now that price was fair, but now that events have changed, people are thinking that price should be a little bit more expensive. It's a little bit more worth getting. So let's take a look at what's going to happen here. We're at the 30-minute. We're going to do two things. One, we're going to monitor this range. We're going to monitor this move. Okay? That's what we're going to do first. Second thing. Let's go back to the first. If price comes back within this range, we see a break of structure to the downside. We know it's rejected this breakout. Fake out, right? And know that based on that fake out, that strong reaction to this, price is more than likely going to move lower. How much lower, we don't know. We got to find the next point of control, which is way the flip down here. That's what makes this a little bit more sketchy because we need something substantial to change market in such a way it breaks out of this now uptrend and continues lower. However, on the flip side, we know points of control on the upside are relatively consistent. We have enough points of control to really target on the flip side if price were wanting to continue. On the note, we have number 2. We're looking for price at the moment to consolidate a little bit, right? In such a way that it tests a range, comes back down, and then breaks past that range, right? Because at that point, we'll not only have that continuation confluence reversal, but we'll also have the range hit, accepted, and move past, which at that point we can then target liquidity through here, liquidity through here. Now, let me back up a little bit because I've been rambling for a minute, and I know I just made things a little confusing. Why am I talking about trends, reversals, continuations like I'm speaking about something completely new? I am, because I want to test this theory. I want to back test the theory really badly. Let me make something perfectly clear though. Today, right now, what we're doing is based on trend. We have daily bias, and then from there, we have 30-minute bias, 4-hour bias, 1-hour bias, 5-minute bias. I'm working with TJR strategy. I'm working with the same strategy I've been working with the past 7 months to truly master before I'm moving on to this. The only thing I'm doing with this is back testing. Okay? Cut and dry, that's what I'm doing. Separate the two. We're on the 30-minute. We know we're in an uptrend based on this breakup structure here. We know this right here, this move down on a higher time frame, is our breaker block. It retested this order block. We proceeded to break structure again, left ourselves a fair value gap, a really small one. 2 if this one decides to close in the next 7 minutes. We'll know that this price was imbalanced. We know that it will hit this range here, which it technically already has. Okay. Technically already has. And this could be considered a point of control. I didn't think about that because we had a low here and a high here. That's about the halfway point. That line is right there. So we could be seeing this right here. According to auction market theory, this would be considered excess. Okay. So rule 4, if the price reacts strongly to the point of control, it can disrupt the rule number 1. Rule number 1, if the price accepts into the balance area, it's likely to revert to the other side. Price often retests the edge of the balance area before traveling to the opposite side. So if we get a strong reaction off the point of control, it means that we're not going to continue through this range. Instead, because it did not accept into the point of balance, the point of control, we've got instead the move back down. Now here's where things get weird, because we can then either refer to rule 3, right? Once price accepts outside the balance, it's likely to become imbalanced and seek new value, often points of control of older balance area. Based on that rule specifically, am I looking for price to either reverse right here, in other words, completely engulf this move, break past this range, and continue on further down? Or, because we now have this range to look at, price will break out of this within this small gap here, retest it, and continue higher from there. We have this set of liquidity to hunt down. Based on those rules, I do think that price has rejected this range, and on opening, we'll see price actually reverse back down. But I digress, and I'm going to choose to wait just a little bit. Okay? That's what I'm going to do. I'm going to wait. We're on the 30-minute. Down, up. That would be the lowest point on the 30-minute. That's the highest point on the 30-minute. That's pre-market. I don't want to mark that because we've already crossed it. This is Asian low. This is low outside of session. Just to give us a fair point. Now think about that. We have trendline lows here. Technically trendline highs, but this is more of a breakout slash indecisive candle here. So I'm not inclined to say this is trendline highs, especially when we've pretty much swept past all of them. The next available high is above here, and that's beyond this point of control, which we've already established that was reacted strong to. So right now, the thought process is price isn't going to continue higher until we see it bounce off this range, and only then will we see it really continue higher, but if it chooses to reverse on the lower time frame, we're not going to see it continue higher. We're going to see it continue lower. The 5 minute at the moment has broke structure below this low, which is sign of reversal. We've gone as high as we can. It's left excess behind, and because of the strong reaction, we're not going to see it continue higher from here. Market needs to open. We'll see what happens. Is that 9 that comes out? 10. So we're going to wait a little bit. We're going to take our time with this. We're going to wait and see exactly what's going on. Because if price decides to do the same thing it did yesterday, which is entirely possible considering it's Friday, there's going to be substantially more volume due to the weekend high that everyone wants to be on to take a trade and move on. It's nowhere near as much as Monday, but still. We have a cross on the MACD as well as the SMMA on the 5 minute, which tells me price is going to be continuing lower, that it has completely rejected that point of control up high. So we are seeing price move lower. 5 minutes says we're in a downtrend. Everything else says we're in an uptrend. Let's take a look at the 30. Yeah, strong reaction to the downside there. We need to wait for one of these two levels to get hit per TJR's strategy. Until they have, I'm not going to do anything. Instead, what I'm going to do is pause this video, and I'm going to stick to the TJR strategy before anything else. A key level needs to be hit. That is rule number 1 of this strategy. And just so we're on the same page, let me go ahead and wait for key level hit. That is how we do things. Scale to 5 minute. After that, wait for confirmation. Break of structure, inverse for value gap, SMT divergence, or 75% extension based on the most recent high and low. After market open. After we've confirmed one of those, we wait on the 5 minute again for our continuation confluence in the direction of the break of structure, inverse for value gap, SMT divergence, and the stronger of the two charts, just so we're on the same page. I've got that tab pulled up to really understand the engagement of an S&T, so I'm not following fake rules, distractions that I've typed up and made mistakes on. If necessary, we'll go to the 1 minute. Find another confirmation of that continuation. Enter, put my stop loss where the idea is wrong. That would be above the initial break of structure, or if there's a big enough for value gap, we'll put it roughly right there, or above the breaker block, order block, you get the point. Within equilibrium, or just above it, really. And then from there, we'll scale out per take profit. I'm going to pause the video now. BRB. That did not take long at all, did it? We have a key level hit here. Price has met that point. Let's go to the 5 minute. 5 minute has hit this point. We are within market open. Let's take a look at what's going on real quick. We want to wait. We want to wait patiently. Not necessarily there, but there's potential for it to continue, so we're going to wait patiently. We had market open, come down all the way to here, and in that same candle span, we moved all the way back up. Now we are moving back down. Let's see what happens. We had a key level hit on the hour, 30-minute higher time frame. If we get more so of a key level hit, that's more of a confluence for us. I kind of want to move back up to the 30-minute and not count that. This gives us a little bit of a clearer picture, less noise. We'll see price either hit this or it'll just continue to fall within the next 22 minutes. Just so we're on the same page, this is not the low. This is not the key level. This white line right here is. There was a high time frame SMT between the Nasdaq and the S&P, and it kind of did this right here, where this right here is a lower low, this is a higher low. Flip side, higher low, lower low. The stronger the two holds the position for longer. As the Nasdaq is clearly the stronger of these two here. So think I say that, but they had technically the same moves. Because it did the same thing here. Lower low, higher low. Relative equal lows. So that could be something we are looking at as well. Where price has stated, even though we had an S&T between these two, because the S&P chose to hold the same price level for so long compared to the Nasdaq, this was the stronger of the two when it came to the S&T. So based on it holding this level and Nasdaq choosing to break the level, Nasdaq gave us a little bit of a heads up before this move here, but they have since matched. So now it's a question of since matched, this blew past pretty much all this and retested this right here. Nasdaq, or not Nasdaq, S&P has not retested this right here. So there is a strong potential for price to reverse retest this and then bounce up and beyond. But we won't know until it occurs. So we'll wait patiently. We're on the 30-minute for the S&P. We're just going to wait for that key level to get hit legitimately, and then we'll take a look at the rest of the confluences to continue to trade. Remember what I was saying before about rule 3 that we were going for? That whole thing behind balance here, and then we had it'd be the reverse, so it's where it's within range, right? Comes up, retests, and then continues higher, right? I think that's what's happening here. We had within range, comes up, retests, finds new fair value areas based on previous points of control. We might be seeing just that. That looks a little bit more like price hit to me. Does it not to you? It does to me right there. That's a key level hit to the high side, and it has crossed it. Now we wait for the reaction off of that. Per TGR strategy, right now we're in a downtrend. We broke structure here based on market open, but we're not going to count that one. We have a key level hit. We're looking for the reaction off of this level right here being swept past or creating, yeah, generally just swept past. Most of the volume is low. We only just recently broke above this here. And I was wrong, by the way. This right here is not how you measure the volume. Apparently VWAP is better with that, so we're using that with this red line here. This is to measure volume. This is to measure that other strategy on Reddit I found. And this right here is to coincide with this. So when this crosses and this is above, we know that this is a legitimate signal. Price is at the moment imbalanced per the fair value gap, and we'll see it either continue higher or we won't. Plain and simple. I'm gonna pause until I see my next confluence. I'm looking for either a break of structure, inverse fair value gap, SMT divergence, or 75% extension. Looks like we are getting an SMT actually. We created a lower high on the NASDAQ compared to this. The stronger of the two holds this position for longer. It looks like we're going to get. Wow, what in the world happened there? It's a good thing I swapped when I did. I would not have noticed that before. We broke structure, same story we did right here. That's no biggie. The move down, though, has created something else. A lower high. Looks like the S&P is stronger of the two, so based on NASDAQ, we can assume the S&P will follow suit shortly. Let's go equilibrium real quick, from this low to this high here. That's a lot bigger than the other one. Because based on equilibrium, we can assume where price might want to go. If it sticks within this range right here, this red block closes within, it can bounce up and continue higher, right? Which would mean the inverse, that the S&P is stronger. Let me actually go. This is where I need to take a look at this. Market bias. We're in an uptrend now. High time frame point of interest. Yeah, this is a high time frame point of interest. This is the sign of reversal that I'm after. Near key levels, bearish S&T, bullish S&T. Asset A makes a higher high, but correlated asset B makes a lower high, suggesting potential reversal, with asset B falling to confirm the upward move, failing to confirm the upward move. So asset A in this case would be S&P, B would be NASDAQ. If A makes the higher high, which it has, and B makes a lower high, failing to confirm the upward move, suggestion of potential reversal of this uptrend. So potential move down, which means we could see a rejection of this range in particular. To confirm which one's stronger or weaker, once a divergence is spotted, determine which asset is stronger, holding its level, which is weaker, breaking its level, which to trade. The weaker asset is often the one that presents the cleanest entry, as it shows where the true move is being initiated. In a bullish SMT, you might trade the asset that did not make a lower low, as it shows underlying strength. So on an uptrend, the one that did not make a lower low is showing that strength and momentum to the high, to the upper side. So because this is not holding its level like the NASDAQ is, this right here is the stronger of the two, making this the weaker. This is the one that we want to take or attempt to take a trade on, because the move is moving higher and higher outside of its range compared to the NASDAQ. And of course, we execute with strict risk management, wait for confirmation signals, order blocks, or value gaps after market structure shift, place the stop loss beyond the swing high or swing low of the divergence where the initial move would be invalidated, and then take profit, scale out 1, 2, 3, and then of course change the position sizing, the lots, and of course be aware of news, which we have 10 minutes till, and we want to make sure this isn't going to get reversed. This right here is a fair value gap. We've had consistent move up. We're waiting for confluence ABC via 75% extension, and the other thing, we have an SMT. I keep saying that like we're about to use just that and only that. I'm not. News has not come out yet. We've got a little bit longer to go. We'll see what happens there. At this point in time, I think it is going to just continue to rise, like go through this range, because it's violated 2 points of controls without strong reaction. Hello. I said that and a red candle instantly appeared. Okay. High volumes of initial move. We want the reactive move. The initial move was to push higher. Buyers had control. They said price was too cheap. We wanted to go higher into another previous fair value area. Oh, I need to swap that back. My bad. Oh, 7 minutes for that to be brought out. Let's see what happens. I need to wait. I need to wait. I need to wait. I need to wait. Sorry, old habits. A nigga die hard. No, that's right.
I will wait. I believe news is out now. Or it's actually at this candle. It is this candle. 55.1, lesser than forecast. So bad for currency, which means we're going to see price move higher into the 75% extension. From here, we're looking for one of the other confluences to this trade being a fair value gap, order block, breaker block, or price to simply fall within equilibrium. I don't think we're going to see price fall within equilibrium. Instead, I do think we're going to see a fair value gap. So based on that, we're going to look for previous points of liquidity. Let's go to the 30 minutes to really hone that down. We don't care about this. We don't care about this. We don't care about this. That's a high to look forward to. We have this high way to flip up here. We have the top of this. Nope. We do have the top of this. That's a fair value gap. We have the top of this fair value gap. We have the top of this. This is point of control consolidation area. Major confluences throughout that. We have this fair value gap here. We have this fair value gap here. And I have no problem going all the way up here with the relative equal highs. They are so close to each other. It's really crazy. Let's go back down to the 5 minute. Really gauge if we get a fair value gap off of this. If not, we'll be looking for the rest of our confluences to really depict what's about to happen. We have not S&P, NASDAQ. We go here. Cool. Break, retest, move higher. Back to this. Break. We did not get a retest. That's actually what we're waiting on. So we'll wait for that. News said bad for currency, so you'd think that would mean go down, but S&P is not a currency. It is a collection of different assets, so a diversity. So got to figure stuffs out. What in the world? Price is far above the VWAP, so okay. We're just waiting. I will continue waiting patiently. Hello, retrace. This is on news? Yeah, this is the reaction to the news. Break of structure right there. We had a low created and it closed below that low. So full on break of structure. We could see a reversal. If we were to treat that the way it is from this low here to this high here, we'll see what happens. Because right now we're within equilibrium. We have a break of structure from market open to the most recent high. It can wick beyond, but if it closes within that range, we're good. If we get a breaker block based on this, it'll be from that break of structure on down that we take a short. T51. Break, move down within order block, breaker block. If it chooses to disrespect this order block, we'll have potentially a fair value gap on our hands. I'm going to remove this so it's less noisy. We have full on reversion over here. Price broke below that. Continuation confluence. Let's go to the 1 minute. This is a risky move. I know it is. I'm looking for the break, not a break above, but looking for an inverse fair value gap. Price to come back up within this with an equilibrium. Let's go to the 5 minute actually. That would be a better idea. Let's go from this high to this low. Because price is going to come back up, retest this. If it closes within this, I'm happy to continue. If we get a fair value gap before it enters fair value equilibrium, I have no problem taking a trade on the short side and just letting it run. However, a lot of the volume is to the high side. I'm going to say I'm wrong. We'll see. Most of the volume's low. We have 1 minute for this to close. Let's see what happens. I actually want to take a look at the minute and see what happens here. Let me see. Way to move up there. Fair value gap. There's a close. We have a fair value gap. We have a fair value gap right there. Let's go ahead and take a look at the 1 minute. We want to see an inverse fair value gap of some kind. Or a break of structure. I didn't think about that. We can close above the high right here. It'd be a short position we're after. Why would be why would we be in a short position if the hour, 30-minute, 4 hour are both all in an uptrend? Because we broke structure. We manipulated the high, swept past it, and we see ourselves moving down. 5 minute presented us a fair value gap. Two fair value gaps, really. Yeah, two fair value gaps. If this candle closes and we don't get what we want on the 1 minute, which means we have a minute 30 seconds, so two candles on this time frame. If this candle closes and the next candle closes, right? And we do not get an inverse fair value gap or a break of structure, I'm going to enter in on a short because we have a justified set of confluences here off of the reaction from the manipulation of the high. So we're going to go ahead and enter a short. Put the stop loss above, not the high, but above the fair value gap. Maybe at the high, maybe. One down, one to go. And that's a close. We're going to go ahead and confirm here. Let's go to the 5 minute. Boom. Let's manage stop loss right up above this fair value gap. Ugh. For funsies, let's go ahead and just do this. For right now, we have potential of making $16 here. I don't think we're going to go that low, but at the same time, there's a potential for that to happen. The reaction off of the manipulation up high is a rejected imbalance. So we'll see it continue lower. Yeah, let's go ahead and click confirm. Zoom in here. We'll take, can you go ahead and get out the way, please? This right here. Boom, thank you. We want to go here. Big oof. Key levels there, so 0.2, 0.3, 0.2. Let's go here. Let's go here. Let's go top of this just cause. We'll mark all of this all the way down. And then we have the low right there where just underneath our final take profit is. So we've entered with 0.3 into this. We have one, two, well, sorry, I'm gonna take that back. We have one take profit, 2, 3, 4, 5, 6, 7, 8, 9 take profits. Yeah. We've entered in on a short because let's go ahead and go back up to 30 minute. We manipulated the high, had a strong reaction off of this range, so it rejected at this point of control. Price is going to want to seek a new fair value area, so it's going to continue on down. Based on the 5 minutes manipulation of this high, we then broke structure here, was presented fair value gap, waited for confirmation through the 1 minute, did not get it at the point of entry. Instead, we got a continuation closure all the way down. We entered on that continuation, it just kept going down, so we entered anyway. There is a potential on the 5 minute for price to come back up and visit equilibrium. So let's go ahead and throw that up here real quick. We're going to go from, it wouldn't be that high there. It'd be this low to this high right here that I'd measure from. I think I'm wrong in doing this. I think the equilibrium is best used this way, from this low to this high. Gives it a shorter range to work with. Price could come up within this. If it closes within this range, that's perfect. It'll continue back down. However, the fair value gap was our continuation confluence, so I'm not entirely too concerned about it revisiting equilibrium. So that works. Continuation's already been there. Confirmation of continuation's a bit shaky, to say the least. It's currently within the range of the order block, so we have breaker block. Based on this right here, it could continue higher, which is a little bit of a concern. But we got a break of structure and a reversal. Low volume and that move there. Though on the 5 minute volume's increasing. I'm confident in my trade idea. I think I did pretty good. I think I did. I waited for the reaction, took a trade based on the manipulation high, fair value got presented, and then from there, we just entered on the continuation confluence. News is done and out the way. Don't really have to worry about that. We'll wait and see. To make this video a little bit shorter, I'm going to go ahead and pause. I'm going to pay attention to this very, very carefully. We'll unpause when we've claimed either our final take profit or we have claimed our final stop loss. BRB. Scary moment. So we took a couple take profits, as you can see down here. We entered 1, 2, 3. Cool. We didn't hit these two take profits specifically. I took these two out of sheer desperation, wanting to get this back. We made 10 cents. Cool. New problem, right? We just broke structure on the 5-minute and we crossed up above the SMA. This right here on the MACD is starting to converge back up to the upside, which would validate this signal being in the up. Problem. We go to 30-minute. 30-minute, we broke below a low right here, right? My stop loss is up here. This is our entry. My thought process is that on the 30-minute, it's going to repeat the steps. We're going to, because of this break structure, it's got to find a way to continue down. In order to find the way to continue down, it's got to retest up here. To retest up here, it's got to, travel above here. But my problem is, because my stop loss is literally right there, if it retests that zone, which I think it will, it kind of already is at the moment, right? It's got to respect it to continue lower. We have 8 minutes, 46 seconds for this candle to close. And it could respect it completely and just continue on down from that candle. My experience in the market tells me otherwise, though. This is actually going to continue higher, and to validly test this, making this move into a breaker block. Hopefully. Okay. If the move is valid and it continues on down, hoorah. But problem, if it continues to move up high and really test this to make sure, right? Even though the strong reaction's there, we could get stopped out in the process, which is a tad concern for me, just a tad. 5-minute at the moment is saying, okay, we've crossed up above it briefly, but this right here is saying we're still below. I'm inclined to look at this when looking at order flow, because pairing it with the rest of the confluence is needed. It's another confirmation confluence of where market wants to go. And for that blue line to be below the orange with low volume to boot tells me that this is a false signal. And I know someone's going to say it, so I'm going to correct it now. This is not volume, and I'm going to break this habit eventually. The red, the pink, the light green, this green, yeah, that's not volume at all. I thought it was, it's not. And if it is, right now this red line is technically volume, and it is in line with price action right now. as well as the blue line, which makes things a little bit more 50-50, and more so based on confluence at the moment. Falling back on what I'm able to see is that this is consolidation at the moment, right? We had a bit of a strong reaction, but it was quickly inverted. We broke structure here, okay, but because of a false signal, we could see it continue lower. These confluences lined up for us to say price is going to continue lower, and it has. We saw the reaction off of this being an inverse for value gap. From this high to this low, price would need to go within an equilibrium if we were to repeat the same confluences. And as you can see, it kind of disrespected it. Kind of. It went above the red line. So now becomes the question. If this is truthfully a false signal, that means equilibrium can't be observed, which means continuation is inevitable. Inevitable suggested, I should say. Because it accepted within a range. That much is obvious. Which side of the range is it on, though? What point of control there is there? I'm going to guess it's like roughly right there where price action currently is sitting. And for it, the majority of the time to be up right here tells me it's wanting to go to the flip side. If it accepts within a range, a balance, it'll want to go reversal. So we could see it go higher, which makes things very questionable for me. There's our blue line right there. We had a retest of this. This is breaker block, order block, break of structure, breaker block, potential continue higher, which means this would be valid. Which means we need to be looking for okay. We could let it retrace because we are still in that break on the 30-minute. And this we know is a retrace back up within this to retest. This whole move from this low to this high is our order block. It could retest this. So this would be this right here is where it would need to stop. If it falls above that red line, I'm tempted to leave. Market. I think we'd break even because we made 46 cents. So 16 minus this right here. This red is going to be issue. But right where we are right now, it's got to retest. On the hour, we had a volume going up higher, and it's slowly converging right here. It holding higher power, and the majority of the time being above this orange right here with that accumulation. I can't see the volume on this one, but I imagine the volume's been accumulating on the buy side for a while now. We could be on the verge of tipping back below because I'm looking at these big dips here. They're small, but they're big, right? Imbalances. We've essentially said, okay, we know this is low volume. We took a trade roughly in here, right? And based on this volume reception, we could see a reversal back to the downside on the higher time frame, but it needs to close within this and then continue on down. Because this is on a high time frame, high manipulation reaction. And it did break below the low. Like, I know it's hard to see because this pink is in the way. Down lowest points right there. So we could see it drop, but we won't know until it happens. We won't know until equilibrium is hit, closed within, tested, and respected. We would not be at break even right now either. We'd lose 30 more cents, which is problematic for me. Big problem. That would leave us with 2 days to recoup almost $7, which is. I'm just gonna let it sit and wait, and we'll see. Good grief. There we go with that candle closure. That candle closed within equilibrium. Okay, no biggie. Now it's a question of retest. It can wick above that, no problem. But it's got to close within it continually and then drop below. I think we can drop equilibrium now. We'll see what happens. Let's see what NASDAQ is doing real quick. Yeah, it's gone down quite a lot. Needed to come back up to retest that, and now it's on the return. It's closed within validly, so I think we're in the clear for now. Small retrace to retest, and then from there, continuation and drop. How much lower, I don't know, but we're going to hold on to it and see. We currently got 11:34 on the clock. Stuff, man. Big stuff. Thoughts and things and that kind of gist. Hmm. Why haven't I paused the video? I'm waiting. Wait, did I pause? No, I didn't. Cool. I'm waiting patiently. Am I nervous? Yeah, just a little bit. Confident in the idea, though. Confident in the strat. $92. 43. 12. I think that's 9. If the line's underneath, that's the bottom, right? That would mean that's 9, and that's 6. 26. 46. 51. 28. Just so you know, this is a whole pound. This is 1 pound. It's a heavy boy. Is that 65? Yep, 65. Ay. 45. Ooh, 40. 30? Wow. Hey, like 45 again. Oh no, 42. My bad. $51 again. 78. 71. That's a sound. Endless and ever. Endeavor. Interesting. Torty. 49. 57. 5. That is the closest I think I've ever gotten to a nat 100. Question for you guys. Have you ever rolled a dice and gotten a nat 100 before? This is a 100-sided die, by the way. More like a golf ball, but still 25. Just so we're on the same page, this is, I think, solid steel. I think. Steel or some alloy. I don't know which, but it's very heavy. Fairly heavy. So. I know y'all heard it. I know y'all heard that. 37. Oh, so close. 26. 29. Back to back. I got a question for you. Should I, for these videos, for after Tuesday and Wednesday of next week, right? Because Wednesday's stream, and that's a major update. Stay tuned for that. Go to Orbs Vault, go to the Twitch link down below. You'll see the stream, and then from there, the YouTube link in the Twitch bio will lead you to the Vault channel with the VOD if you're interested. That stream is going to be the announcement of major changes across all of my channels, right? Okay. From there, the question is, would you guys rather continue seeing stuff like this, or would you rather instead watch me create the rest of that D&D world I've got going right now? Because it's still up. It's still rocking. Like, I could do stuff on that right now if I wanted to. And in the event you guys can't make up your mind, because that's entirely a possibility, would you rather, instead of it being just this or just that, I couple the two? I put 2 screens, I guess, up, and you get little camera me in the middle, and we'll just bounce back and forth between it. I get that's kind of impractical considering this is occurring really early in the morning, and that's typically done really late at night. So coupling the two would be interesting, but keep me fresh on my toes when looking back and forth, right? I think it'd be a little excessive, the amount of action I'd have in front of me. But, oh, I have enjoyed creating that world. I really, really have. I've also enjoyed doing this. Nat 100. Let's go. Finally got Nat 100. So the retrace was valid. It closed within equilibrium. Now we need to see it full on continue down. See if it's retest. Yeah, it's retested. It's closed within. Still testing is, I guess, a better, an apter description of what exactly is happening. We got a breaker block, retest of this order block, closed within equilibrium of this entire move. Now we should see it continue lower based on the break of structure here. 5 minute pretty much falls in line. We had a break of structure without retest. We had fair value gap after fair value gap form, and we are just now getting that retest. Not up to this order block, but to the larger order block here, and within this range. So we should see it fall. And because it's so close to this right here, the amount of time we've built up and accumulated on low volume mode for the bottom half of this, we should see it continue lower. Everything is pointing down. It's agreeing with the trade idea so far. That's the only reason I haven't backed out quite so yet. Indecisiveness in the market between the volume, between the trend, and just general retesting. So that's what we're waiting on. That's what we're going with right now. $89, $72, $43. Yeah, 43. I ought to go one day and just count up all of this to make sure it's like a legit die. What in the world? That was weird.
Hmm. Crazy. Chef.
That's cool. Sure. I'm gonna pause the video. One moment. Stuff. Kind of what I feared was gonna happen. Leave 8 minutes for that candle to close. It disrespected this range here, which gave me that would have been my exit strategy, but I made a boo boo. Man, good stretch. We're still in the breaker block range for that, for this right here. On the 30-minute. It could still be testing this. My biggest concern is getting stopped out right now. What could I have done differently, I think? Just wanted to unpause to observe with you guys exactly what's happening. Because, yeah. Big oof. The consolidation hurts to look at. It really, really does. Hmm. Crap. I think we're gonna get stopped out. We broke here. We have a giant fair value gap. We have 4 minutes for that to close, too. And there's still potential for us to be wrong. There is still very much so a potential because this right here is being tested. But I do think this range is going to get disrespected. Man. The idea was correct, and we had plenty of opportunity to back out with more of a profit all the way down here. We had like $3 down here at one point, which would have been a substantial recovery. Not this one. I changed it. It's the other one. Haven't heard that in a while. Crazy. I think we're good, maybe. Hmm. Let's go ahead and get rid of this. $5 seconds for that candle. Let's see what happens. I know this is multiple hours long now. 2 hours. We've been recording. It is equilibrium that we're looking at. I'm gonna pay attention to this, pause video and everything. BRB. Wanted to make sure I was unpaused, still recording. I think we are gonna get stopped out. We're in an imbalance right now. It hasn't slowed down much. Nothing saying it'll come back down. We disrespected equilibrium based on the high time frame stuff. And we could very well be in a breaker block situation here. It could be a retest, but at the same time, I think this initial break out of this consolidation was the major indication that, yeah, price is actually gonna start reversing and going higher. The end of this move was pretty much there. I mean, it made sense. Um, I should have really taken note of that. Feel like if we had continued in the up direction like we did, I don't think we would have gotten a trade. I think we would have stayed out of market today. Because if I had taken a trade here, I would have definitely been stopped out. My stop loss would have been put right here. If not right there, like somewhere in this, and I would have gotten stopped out big time still. So today, I think is more consolidation. The longer it sits in consolidation, the more volatile it's going to get, and this volatility it makes sense. It does. It just decided to manipulate a range and then fake out, push down, I guess double fake out, something along those lines. I thought today was going to be a good trade too. I'm gonna let it go. I'm not gonna force it out. I'm just gonna. My stop loss is where it is. If I get stopped out, okay. Um, I don't know what I could do here. Obviously, I could go back and just reread everything. Nada. We have 2 days remaining, Monday and Tuesday. I've made $10 in 2 days. I'm not counting myself out yet, but at the same time, foundation shaken, tested. And it could just be filling that fair value gap without really going higher. Or just watching, sitting on my hands. I'm done touching the mouse. I'm gonna let it do its thing, and we'll wait. I hate that the past couple of days have been like this, where I go for a trade I think is accurate, and then I instantly, or we get to the point where I want to take my first take profit, and we hit it. We take our first, and then immediately after, it's like we almost immediately get stopped out. I'm aware of the high it created. I'm aware of the points of control above. I noted them on purpose. I knew that they'd be targets eventually. We manipulated a high and we took TJR's strategy into place over auction market theory. The only thing I was using auction market theory for was legit the rules behind trend, not the confluences needed to enter a trade. What justifies me staying in this trade? What justifies me leaving the trade? What justifies me looking at this chart at all? The thought that I could make a little bit from entering and leaving. I understand not to hold it for too long or forever. So, what's my biggest mistake this video? Comment down below. Comment. Help me out. What was my biggest mistake here? I waited for the reaction. I didn't take a trade at the start of session. I noted that the range was disrespected, that it swept relative equal highs off to the left. It rejected the point of control, that red line above it. So down should be the direction it's going. Based on high time frame confluence too, this could very well be a breaker block in response to the break of structure beforehand. And if it is, then it's a valid reversal. It's a continuation of that break of structure, not the move up. I really need an indicator that can read just volume, straight volume, nothing else. Because I've been treating those bars on the MACD as though they are volume. But I don't think they are. I also think my stop loss is set too low. I'm not moving it, but I think it's set too low. I think it's actually supposed to be up in the wick of that green candle there. That would make the most sense. Because when it clears this, it has cleared the fair value gap. It's got to retest that order block right there on the lower time frame. But the imbalance says, nope, we're going to go higher. So we'll see. There we go. Stop out. Hope you enjoyed today's video. That bites. It really, really does. It really, 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 really does. I was really hoping to be successful this trade. Dang it, man. And we were good for a while, too. I guess the volatility of just it rejecting the point control up here is just too much. I don't know. I thought I did pretty good, too. I guess I'm going to be hitting books later on. We have Monday and Tuesday to continue trading. We could make it back. We could not. Um, I knew the risks going into this trade. I'm going to take that punch and move on. See you guys in the next video. Peace.